All right, the market has just smashed through a huge psychological barrier. After a week for the history books, all eyes are now on this Monday, February 9th. So what's the prediction after such a massive close? Let's dive in and break it all down. Okay, first things first, let's talk about the headline that everyone is still buzzing about. On Friday, February 6th, the Dow Jones Industrial Average closed above $50,000 for the very first time. I mean, what a rebound after a seriously bumpy week. This sets an incredibly powerful tone as we're all heading into Monday's trading session. So what's the verdict for Monday? Well, it looks like we're heading for a strong, maybe even an exuberant start to the week. And look, this optimism isn't just because of that Dow milestone. It's really about the resolution of a major geopolitical headache that's been weighing on stocks for a while now. And that, right there, brings us to the main event. Over the weekend, a bizarre but very serious threat of a transatlantic trade war was officially taken off the table. I am talking, of course, about the whole situation with Greenland. You know, the speed at which this whole thing blew up and then got resolved is pretty remarkable. It all kicked off on January 21st, when President Trump threatened 10% tariffs on key European allies over this proposed Greenland purchase. The market hated it. I mean, it reacted immediately, sending the S&P 500 to its worst day in months. But then, by January 29th, we got a framework announced at Davos, and just this past weekend, that deal was solidified, officially taking the tariff threat off the table for good. So what's actually in this deal? Let's take a look. Greenland sovereignty, that stays Danish, which, avoids a major conflict. The U.S., it gets to expand its military presence, securing its strategic interests. But for the market come Monday morning, the most important piece of this whole puzzle is right here. The tariff threat is officially dropped. That is a direct tailwind, a huge gust of wind pushing stocks higher for so many global companies. Now, this good news didn't just pop up out of nowhere. It comes right on the heels of an incredibly turbulent month for the markets. Seriously, January was a wild ride, with some pretty big swings and a lot of uncertainty driving how investors were behaving. Just look at the S&P 500's journey. It took a sharp 2.1% dive right in the middle of the month. And yeah, that was fueled by those very tariff concerns we were just talking about. But in a real testament to its resilience, the market just clawed its way back, finishing January with a 1.4% gain. It was truly a month of sharp dips and strong rips. But if you look under the hood, a major rotation was happening. Money was flowing aggressively into very specific sectors. Energy was just on fire, surging over 14%. Materials also did really well. On the other side of the coin, you had financials, which lagged behind and actually finished the month in the red. And it wasn't just sectors, right? We saw the exact same story play out with investing styles. With inflation concerns bubbling up and some mixed earnings from big tech, investors started rotating out of those high-flying growth stocks and into more traditional value stocks. The Russell 1000 Value Index, it gained a solid 4.5%, while its growth counterpart actually fell by 1.5%. Okay, so the Greenland mess is sorted, but that doesn't mean we're totally in the clear. There's another big cloud of uncertainty hanging over the market, and it's coming from a place that investors watch very, very closely, the U.S. Federal Reserve. And folks, this is something you just don't see. In January, Fed Chair Jerome Powell came out and revealed that the Department of Justice had served the Federal Reserve with grand jury subpoenas. This is a level of political pressure that is rarely, if ever, seen being applied to our central bank. And Fed Chair Powell did not mince words about it. He called the move an unprecedented threat to central bank independence and a politically motivated attempt to basically force the Fed into cutting interest rates further. This kind of political arm twisting is a major red flag for the markets. So why is this such a big deal? Well, central bank independence is a cornerstone of a stable economy. Think of it like this. It's the idea that the people in charge of our money supply should be focused on long-term goals, like keeping inflation in check, not on short-term political wins. Any threat to that independence creates a ton of instability and uncertainty. And to throw another log on the fire, we've got a potential leadership change on the horizon. President Trump has nominated Kevin Warsh, a former Fed governor who is known for being more hawkish. That means he's more aggressive about fighting inflation, maybe with higher interest rates, to take over as Fed chair. This just adds another layer of unpredictability for investors. So we've got the geopolitical picture clearing up, but the picture at the Fed is getting murkier. So what's next? Well, the coming week is going to be absolutely critical because we are about to get hit with a tidal wave of major economic data. Because of some earlier delays, everything is getting jammed into this one week. It's really unusual. We're getting three massive reports all at once: the January jobs report, the January CPI inflation data, and the retail sales numbers all the way back from December. Having all this data drop at once is rare, and it's going to give the market a huge amount of new information to digest. And that leaves us with the final, crucial question. The market is heading into Monday with a major tailwind from that Greenland deal. But with all this key jobs and inflation data about to drop, will the economic fundamentals confirm this bullish feeling and fuel the rally past 50,000? Or will they reveal something that stops this momentum cold? We're all going to be watching very closely. Thanks for joining.